Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, and he's back. The man, myth, the legend from Las Vegas, Brian Leba. How you doing, buddy?
What's up? I'm fantastic, man. How are you guys doing out there?
Oh man, we're doing awesome. If people have been watching us talk for the last couple of years, you know that I always start with this question: what is going on with the lot premiums? The reason I asked this question is our very, very first interview. You told me you want to see pain, watch lot premiums. So, what is going on with the lot premiums? We got to start there.
Yeah, every builder has a different way of dealing with lot premiums. So some of them just absolutely have a bidding war. So some of them had blind bidding wars like Pulte, where there would be a suggested offering, but then obviously it would get bid up and it was blind. Whereas other builders would actually put the lot premium on the plot map, and it was up to you to accept it, or someone else will effectively. So Pulte's gotten away from the bidding, and virtually every single builder has cut their lot premiums at least in half. At least in half. The average is half. Now, on the same hand, a lot of these new lots that are coming up are just zero lot premiums, as they should be. So
Wow.
we're getting to where we thought we were going to be when we first started having this conversation. It may have taken 2 years, but we're
It took
getting
2 years
there.
to get here, but we got here.
Yeah. And, over the last month, I've seen a lot of these lots that have been slashed in half. They're not moving. So,
Yeah.
Even though the price is half, I'm sure you can negotiate that down, because now
Right.
buyers have negotiating power.
Yeah. So let's stay with the builders for a minute, and then we'll get into existing home sales, which is where we will spend the lion's share of this conversation. But builders, again, I have to imagine we actually have true price cuts, not only kind of move-ins, rate buy downs. What's going on with the builders? Are they slashing existing inventory? Are they slow? I guess that's the big question for me. Are they slowing down? Are they stopped building? Have they canceled projects? What's going on with new builds in Vegas? Because it's got to be slowing down.
Yeah, I mean, I haven't seen any projects completely canceled. In fact, I've actually seen, I think KB Home, Toll Brothers, they actually released new communities in this
Oh
last
wow.
month. So
Okay.
whether or not that's a wise decision or not, time will tell. But I think to a degree, these were already, in line, so they kind of had to proceed.
Okay.
But yeah, I mean, there's blood in the streets. There's no way around it. I mean, we all know where we're at. The norm at this junction is buy downs.
Yeah.
So, the buy downs normally down to about 5%. So if you use their in-house lender, et cetera, they'll pay you 3% for closing costs. They'll buy down the rate to 5%. The downside is you're still overpaying for that brand new home to have the privilege of a new home.
Right.
I've been bearish on new homes for the last 5 years, because some of them just never made sense to begin with, and now you're seeing these corrections, and those are the most exposed properties because they were gratuitously overpriced in a time where things were getting overpriced. So even though you can cut a great deal on a new home, you still have to be careful that you're still not exactly getting a great deal in this market per se.
Yeah. So what I think you're saying, and don't let me put words in your mouth. If you're going to go for a new home in Vegas today, you're still paying some kind of premium. Yes, you'll get a rate buy down. Yes, they'll do this. Yes, they'll do that. But still, based on brand new versus something very similar, maybe even in the same area, there's still a gap, new versus existing, is what
Yeah.
I think you're saying.
And it's important for consumers to understand that, when we talk about lot premiums, right? Like when I first got into the business, and your whole life, a premium lot meant what that is, that this lot was premium. So you have a corner lot on a larger lot. You have, a cul-de-sac with a massive wedge shaped backyard. Those used to be the premium lots, which commanded a premium lot price. Whereas the regular lots were either 0, 5,000, maybe 10,000. And then you'd have a $30,000 premium lot for those larger ones. At some point, that whole concept became perverted, and every lot was a $50,000 minimum, and then premium lots were 200, 400, 800, a million. So what people need to understand is, even right now, if it was an $80,000 lot that's now down to 40,000, you're not necessarily ever going to get that money back. You know what I mean? Is it really truly premium in the sense, does it have views of the entire valley? Is it larger in size? Because this home versus this home on the resale market, you paid $5,000, this guy paid $50,000. No one's going to know what you originally paid, nor will they care. So there's a lot of ways to really lose money by buying a new home if you aren't smart or don't have the correct advisement from someone.
Very cool. Well, now let's switch to what you've been doing for all these years, really tracking existing home sales. The last couple of months, transactions way down, kind of 30-40%. Prices also falling. I think they peaked in June, maybe July. What was the latest stats? You just put together September, I believe.
Yeah. So for those of you, and we'll get to it later, but I just put this video out on Tuesday. Every month I do a monthly update video. So I put this out on
It
Tuesday.
was awesome.
Thanks, man. I appreciate it. And right now, we're at today's the 7th of the month. I don't think any local news has even reported any of these numbers still. So I usually beat the news by at least 4 to 5 days. So this will be coming out any day now. So I'm looking at a spreadsheet right now. So last month we sold 1,710 homes, which means nothing to your audience unless you have context. In context, last year we sold 3,033. We sold about 3,000 in 2020, and we sold 2,500 in 2019. So what that translates to is sales were down 43.6% based on last year. So I mean that's a massive, massive difference as far as sales volume. And even from the previous month, we were down 3.5%. Now, where the flashier headline is the median price, and our median price has consistently been coming down now for 4 straight months actually. So we peaked at 485,000 back in May, and we've been giving it all back every single month. So on one hand, last month was the smallest decrease in median price that we've had. We only went down $4,000, but nonetheless, we're still going down. So the median now is down to 445 from 485. So we're closing in on the 10% range, but keep in mind, that's only in a few months.
Yeah.
Where we get to a perspective here is we ended last year at $430,000. So we're only $15,000 away from being right back on par with last year and giving up all the gains we had in the beginning of this year. And we're talking $15,000 in the next 3 months. I think that's very, very, very easy to do, especially, we'll talk about, sellers breaking here in a little bit, but in these next few months, that's when I think you're going to start seeing movement in this market where sellers realize, and we're going to have that separation. We already have separation between sellers who wanted to sell, who are kind of dipping their toes in the market, and those that need to sell. And those that need to sell are really going to start taking it hard over the next 3 months. So you're going to see that median price, I think, really start to come down as we start getting a lot of these lower price sales. So
Yeah. This is going to be fun because I might take the other side of that debate, just mathematics, just for fun,
yeah,
frankly.
yeah,
But
go for it.
before we do that, the other thing that you put out that I think is amazing, and I've never seen anybody else do this, is you bifurcate the market on price points. And I
Right.
think people really need to realize, and it's actually why I might take the other side. It's a very Vegas specific thing, which we'll get to in a minute. But talk about the absorption, I think you call it, at price points, because I think you're seeing interesting things in the data.
Yeah, so I have a metric where I go housing saturation by price range. And so, this is really good in the sense that, whether you're an investor or a regular consumer, we're all looking at different properties, right? And real estate is local down to literally parts of town. So one part of town may not be performing as well as the other part of town, but most dramatic is price ranges.
Correct.
How is the low end of the market performing as opposed to the luxury end of the market, because your experience is going to be very different than mine. So for me, it was originally coming out of quarantine where I wanted to see how these different price ranges were performing. And so that's when I really started this metric. The rest I've been doing for 10 years, but this one's a little bit more telling. So, without going into every single price range, this is where it's kind of interesting. Homes under 250,000, it's almost not even really worth discussing because there was literally only 67 homes in all of Vegas under 250. So that's kind of moot. Where you get interesting is the bulk of our market, the vast majority of our market is 250 to 500,000 with a median price of 445. And, at the high back in March of this year, we were at 77%. So what that means is 77% of homes on the market are under contract. So 3 out of 4 homes back in March were under contract, everything. Now that number is 24%. So now it's only 1 out of 4 homes are under contract. It's a
Let, let,
huge, huge difference.
let me ask you. So that is awesome. That's why I love speaking to you, because you're just in the numbers. But there's actually one other metric I want to ask, because I think the data is in front of you. What was total inventory for September? Like active listings, what was that roughly?
So inventory, we've actually plateaued on inventory. So we ended September with almost 8,000, 7,993 properties compared to 7,888. So inventory still went up, but it only went up by 1.3%. So that's fair to say a plateau.
Yeah, but what I was going to ask next is what, because again, I agree with you. And this is where the debate will come in, and I'll know in a minute if I'm going to take your side or mine. What is the active listings 250 to 500,000?
I don't have the active listings. Active listings 250 to 500,000. Let's see.
Yeah, because you have the math there. It's got to be buried.
So on the market, there's 5,530, but in contract are 1,304. So let's just say 4,200 homes are on the market without offers.
So 42 divided by 8,000.
So it's like 50%.
Yeah, 52.5%. So this is going to be very interesting, because this is why I might take the other side. And again, it's very Vegas. I don't know that I would do this any other market. And it goes back to your conversation with me 3 months ago. You said, Michael, I think most of the pain is between 750 and 1.2. And if you're right, we're going to see monster haircuts in, like, if you need to sell and you're in that market, you're going to take $100K haircut,
easily,
which is 10%, 15%, but you're still above the median.
Right.
So you'll see a big whack on those prices, but it's still above the median. It might pull you higher. So that is going to be, and that'll be very telling in Vegas. Like I just naturally think, and could be completely wrong, that the low end of Vegas, not a lot available, kind of moves, kind of investor market. Anything that's cheap will be picked up. But I think you have a lot of built up pain. And like you say, I think we're going to see the sellers that break, I think, are above the 750. I'm just trying to tie together all our conversations from the last 3 or 4 months. What do you think?
I think there's different timelines. So I think when we're discussing that, I mean, eventually everyone breaks. It's just a question of timing, right?
Correct.
And the difference is it's just demographics, right? Lower end housing, lower middle class, their savings aren't as strong, and their wherewithal, their ability, like we were talking, months ago about months of life, that tends to be a lot lower on the lower end. And then the higher you go, you have other things to contend with. You have better savings, you have an acumen level where they have options and legal options. There's games they can play.
Sure.
They're just a little bit more astute.
That's true.
So their wherewithal tends to be a lot longer out. So whereas we've already seen people break, I think the luxury market doesn't really break until next year, just because, again, like I said, they have larger savings ratios, and more importantly, you're also dealing with a tremendous amount of ego. A lot of times, the ego doesn't allow you to separate. But I mean, look, if you're working at Walmart and you're a supervisor and you've got 2 months savings, and now all of a sudden you can't afford your house and you were going to sell anyways, you just have to do what you have to do, and that's really it.
It's going to be really interesting. And again, this is why talking with guys that are in the weeds, in the data, and you've been in it for a decade, is so fun, because I look at the other side, and really for me, it's who needs to sell this year, right? There may be tax loss harvesting and some other things going on, kind of the well-to-do folks. It's like, hey, I just don't need that second home, blah, 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 blah. Right. So they get it off the books. So they actually get some, perhaps some tax savings. I don't know. It's going to be interesting.
Well, I think from what I've seen a lot, though, I mean, like we've talked about before, the difference between this time and last time is, even if prices are plummeting in value, as an investor, what's the opportunity cost, right? Yeah. And so if you're making positive cash flow on your investment,
you got a 3% mortgage.
Yeah, you got a 3% mortgage, you've been locked in for 2 to 5 years, and rents have just gone up continuously. So in that context, if you're an investor, why would you drop a property that you're making $500 a month positive cash flow on
Yeah. I
and
was
take a hit?
thinking, yeah, no, you're absolutely right. I think if you're an investor in Vegas, you don't do it. Certainly if you have 30-year fixed rate debt, you don't anything.
No.
I was thinking the homeowner's got a second home and it's vacant. That's who I was thinking of.
But in this world, it's also different. In 2008, we didn't have Airbnb and VRBO. So
That's true.
now, look, if you're feeling a little bit pinched, your investments are rough, and you're not making the trips to Vegas like you were or were planning on, now just throw it into an Airbnb pool, and now you're
Yeah.
making so much more money than before when it was just laying dormant. So I mean,
True.
we do have options now that we didn't have before.
Yeah.
Like I said, what I'm seeing is, the pain is like there's two properties that I'm eyeballing right now. One's a divorce situation, right?
Yeah. Gotta
Husband,
sell, gotta sell.
yeah, they
Yeah.
have to sell this property. The husband's on board. And this is one that one of the investors, one of the investors from this channel. I don't know if you're watching, but this neighborhood was selling for $600,000 all day long. Well, there's two properties. One 600,000 all day long. They had to drop the prices to 500. Then it sold for 475. So they've already taken a 20% hit because that neighborhood took a 20% hit. Now homes are selling because that's the new benchmark. They've already taken the hit. Now those properties have a value to them. Now another property, amazing, in Summerlin, the best part of the entire Las Vegas Valley. The last two homes with pools sold for $660,000, $640,000. The agent I know listed it for $600,000. I told her, you're never going to sell it for $600. Let me know when your clients are willing to take $500,000. Just let me know.
Yeah.
She called me 8 o'clock Sunday morning and said, hey, we got our first offer. It's $505,000 with closing costs requested. Get me that $500,000 and let's see what we can do. Now, that's the value of this house is $500,000. They've also taken a 20% hit. Husband's on board. Wife goes, well, I looked on Zillow and Zillow says it's worth $550,000. So here you have a classic case. One's on board. One does not understand the market we're dealing with. So this house will sell, and it'll sell 500,000 or below 500. It's just a question of getting them acclimated and understanding what they're dealing with. And that's what we've been dealing with sellers for the last 2 months, but now they're starting to break. And as sellers break, that's when neighborhoods start loosening up. You know what I mean? And that's what we've been waiting for. So I think November and December is money time. That's money time.
I agree. And there's a couple of things I want to point out in both those examples. Both of those examples would pull the median price higher in Vegas. I'm just saying. Back to that.
But that's because I look for a specific type of investment.
I'm just teasing.
But good observation, man. You got me on that one.
There you go. Well, and again, I do believe, and I believe in most hot markets between Thanksgiving and New Year's. Yeah, that's the time to go. That's the time to go ham. Just write your offers. If they accept your first offer, you're paying too much, right? You've got to go, and you got to go in deep. The other thing I want to talk about, kind of the market, is I want to talk about inventory, right? Normally speaking, inventory in Vegas, does it fall October, November, December generally?
Yeah. No, it's very, very normal. I mean, I can pull it up, and I can go back 10 years, but I mean, even if you look at last year, from October 28th, every single week throughout the entire year, inventory went down. In 2020, starting September 23rd, inventory went down every single week. 19, October 16th. So it's pretty typical that inventory does go down. This is actually already abnormal because we're already into those times where inventory should be going down. And we're going up, but we're going up literally, if I look at the last few weeks, 24 homes, 23 homes, 24, 15, 43. So we're pretty much plateaued. But again, one of the things that is different this year versus any other year is inventory is only showing you half the story. Because like I said, we are all adapting to this new market, right? And there's a huge division between the sellers that wanted to sell and now are like, you know what, forget that new home. I don't want to take a 7% mortgage. This is stupid. I'm just going to stay put. So what we haven't seen before is the inventory is actually a little bit worse than depicted, because what we're not talking about is the withdrawn listings. The withdrawn
Yes.
listings are up 280%.
Oh,
Now, but there's, again, there's empty caloric statistics, and then you need context. So even though withdrawn listings are up 280%, it's also important to note that the reason they're up is because a lot of people will withdraw the listing and then re-input it so it looks like a new listing. You
right.
didn't have to do that a year ago.
Right.
So a lot of those withdrawn listings really have already been relisted. But nonetheless, the fact that we have positive inventory combined with 280% increase in withdrawn listings shows you how weak it really is, because
Yeah.
every historical year we should be coming down. Then add to withdrawn listings, we should be plummeting. And we're not. So
Yeah.
reading between the lines, it's a problem. And again,
Oh,
interest
Vegas is in trouble. There's no question.
well, interest rates, I mean, what you're talking about, like that median price, the problem is, a $425,000 home right now is the same payment as a $600,000 home was in January.
That
So
is
a
crazy.
lot of buyers, even if they were willing to jump into this market, they're effectively priced out because of
Yeah,
interest
they
rates.
can't get a yes. I mean, when you can't get a yes answer from a bank, you actually don't qualify as demand, right? Demand is a
Yeah,
two-step. You're willing and able. If you don't have the able, you don't count as true demand. It's a two-step function with demand.
right.
The one thing I wanted to ask about, and it might be a month too early, because again, I think this all started in July. What about expired listings? Is the normal contract listing contract 90 days in Vegas, or is it six
I mean,
months?
a lot of things are no longer norm, right? Just like 6% listings, that was always the benchmark.
Yeah.
It's so loose now, and it depends on what market you're in, and it depends on what type of market. Los Angeles, at the median price is $1 million. It's not normal for a buyer's agent to get a 3% commission. A lot of times 2% is very, very normal. In Vegas, if you have a 2% commission, no one's going to show your property.
Got
So
it.
different markets are going to respond very differently in that context, just like in the same way as far as listing agreements, right? Last year, well, I'll sign a 30-day listing agreement because your house is going to sell in 2 days. I don't
Right.
freaking care. It's
Yeah.
irrelevant. Whereas now, look, if you wanted to sign a 2-month listing, I'm going, well, I'm probably going to be wasting a lot of my time, because unless you're willing to price this to move, I'm going to have to, it's going to take you 2 months to acclimate and realize what you're truly dealing with. So yeah, I wouldn't take a listing unless it's 4 to 6 months, because frankly, it might not go anywhere. I want someone who understands and is going to
Yeah.
have enough time.
Yeah. I think it's wise as an agent. Have you seen, or maybe you don't track expireds? I'm guessing they're probably up on a very small number. So
Yeah, I don't track the expired listings, but I mean, I would presume that they are up.
yeah.
I mean, just inherently by nature, with homes not selling,
Yeah.
inherently that's going to happen.
Yeah. And then the last thing talking about Vegas is where do we go from here? So I think we're both in agreement. If you're a buyer, the next couple of months are your time. Let's roll over until next year, maybe next year. Kind of. I think things. I don't know where we are March 15th. And why do I pick that? Generally speaking, March 15th is the start of the new spring selling season. It,
Right.
it becomes hot. We could be at 8% mortgage rates. We could be at 5.
Right.
We could be in 8% unemployment. We could be at 4. We could be at World War III. We could have peace. I mean, I have no idea what's coming. The world is so fuzzy today.
Right.
But when you look into next year, do you see Vegas healing itself? Do you see just a lot more pain? Uh, Any thoughts or opinions on 6 months from now?
You know, Even though I've been doing this for 20 years, I've personally never seen an effect of interest rates like we're seeing right now.
Yeah, me
We,
too.
we get the anecdotal stories of it. It doesn't take a genius to figure out or grab a calculator, but seeing it at the ground level and the effect that it's having on people, I would say that the singular metric that you really want to pay attention to is interest rates, because last time we were in a market like this, it was just a constant race to the bottom, and it just free fall. And people have to remember, everything started blowing up in late 2007, and really we paid attention in 2008. But the market did not start recovering until 2012. So it was a 4-year period of declining values, to the point that it was so absurdly low that how could you, who cares if it goes down a little bit more? The cap
Right.
rates were just astronomical. So what happened was when investors realized how generous the cap rates were, anyone with any capital in 2012 just said, hey,
Yeah.
I've got 500,000, I'll buy 5 homes cash.
Yeah.
And once the investors came in and purchased, then that signaled to the general public, oh my God. And then the second prices finally went up a notch,
They
then
just,
everyone jumped in and then
yeah.
everything went through the roof, and it's been 10 years of acceleration. What
What was median price January 2020? I know you have it there. I don't know if it's easy to
Yeah,
find.
give me one. Yeah, it should be pretty easy. All right. So median price January of 2020. Yeah, I mean this is it's bad. So January 2020 it was 300,000 compared to 445 right now.
And you
I mean it's
started at four, so 485 was the peak.
right.
That's a 40% cut.
Hmm.
If you were just to get back to January
Right.
2020, I can tell you right now, I would not think it gets that low again.
No, I don't think so. I think really again, I hate to give black and white answers because there's so much nuance to it, but I think the number is more around 20%. From what I've seen, even though this market currently is terrible, the neighborhoods that have been hit with 20% are
They
now
sell.
able to sell.
Yeah.
And the neighborhoods that haven't really budged, it just becomes a parking lot. But I will
Mm.
say that there are some higher end neighborhoods where the prices were so whacked out of control, they should go down 35%, maybe 40%, because the prices were unjustifiable. So if they went down 35%, I wouldn't even be
That's not
surprised.
that's not Vegas wide though.
Not Vegas wide. No, no, no. I think the Vegas wide number is 20%. And I think obviously it takes time to come down, right? It doesn't happen overnight.
No, of course.
It takes a little bit of time. I think what we're going to see is we're going to see every neighborhood's going to have one seller who has to sell their house, and that is going to crush the values. And other sellers are going to remove. I mean, I've been watching this happen for the last 2 months. So
Exactly.
the people
Yeah.
who
We're
want to
not
sell,
selling it at that number, honey. We're going to stay put.
exactly. So once that sale goes through and everyone refuses to pay higher than that number, if there's 8 listings, 4 will bow out, and the other 4 are going to go, okay, wow, well, let's get it done, and that
Yeah.
neighborhood will start to sell. I think the real catalyst is going to be interest rates. Like you said, when we get to March, April, May of next year, if rates break down into the fours again, if they break through the fours, I think you're going to have a year's worth of buyers and investors who held out that jump immediately, because you got to remember, at that point where this happens, you're still going to have desperate sellers. So you're still going to
Oh, yeah.
get closing costs paid. You're still going to negotiate, and you're going to get a generous interest rate. So if you don't buy in November and December and rip some great deals, what you have to do is wait until those moments that rates get low, and then you got to go all in, because it's just a short period of time before
I agree.
all the other consumers so feel comfortable, then they're going to jump in, and that's when you'll start seeing demand and prices rise. And you got to remember, the market is terrible. There's no way around it. It is terrible, and we're only selling 1,700 homes a month, right, with an 8,000 inventory. So because sales are so low, we have a 4.7 month supply of inventory. Now, that's not even technically a balanced market. A balanced market is 6 months, right? The only reason we have 4.7 months is because no one's wanting to buy a freaking house right now. Well, when we get back, like let's just say in May, rates break to 4% and buyers start coming out, we're going to be selling 3,000 homes a month again. Well, suddenly that 8,000 supply is what, 2.75 months supply? That's nothing. So
Yeah.
inventory really isn't that high. It's just sales are depressed. But the second sales start to accelerate, that could eviscerate inventory relatively quickly. So as quickly as the market turned in one direction, don't be surprised. Look, maybe it's March, April, May of next year. Maybe it's going to be 18 months from now, but the market will drastically turn quickly once those rates come down and once investors jump back into the market, and then buyers feel comfortable seeing 2 months where prices went
Yeah.
up.
Yeah, for me, one of the things studying the consumer, I actually don't. If we got to below 5%, it's off to the races. I actually think the psychological number is 6%. I think we're going to get used to 8% mortgage rates because again, investors are in the eights. we're going to get there for 6 months, and then we're in a recession, Fed cuts, whatever, margins that banks charge comes down, whatever, we get below 6, you're going to get enough net new buyers. Because if the bank offers you 5.99 and you get seller credit buy down, you're in fives. I think we're good. So I do think there's more pain ahead.
Yeah.
I think you're right. 20% in Vegas feels like a safe. I don't see 40%. I don't see 300 grand median.
No.
It's just not set up for that cascading fall. But as we look to the end of the year, I think transactions, like, what were transactions like November, December? Because I think you could be down 50%. You were down 43% last month.
So as far as sales transactions,
Yeah,
again,
total.
this time last year we did 3,000. Now we're at 1,710. October of last year was another 3,000 month, and I'm guessing this month is going to be, if we did 17, I'm guessing we're going to be 1,600. We might dip below 1,600. Like I said in the last video,
50,
there's only been 3 months that were worse than last month. 2 of those were January of 19 and 15. And again, January is the worst month of the year every year, come rain or come shine. So to be worse than a January is pretty bad.
Saying something, yeah.
And the only month that was the worst of all time was May of 2020 in quarantine. So
what number was that? 14 something?
1533. And this month we might be right there.
We might beat that, yeah.
So you got to think, in an entire decade, if next month is 1,500, we are performing at pandemic levels. That's
wild.
There's no spin. You can't put a spin.
No, that's all interest rates. All interest rates. All interest rates. Well, Brian, if somebody is looking to invest, a lot of investors on my channel, lots of them reaching out to you. More should be reaching out to you, because again, if you want to be buying in Vegas, you need to go ham between Thanksgiving and New Year's. Brian is the guy that's in tune. You need to reach out. How should they do that?
Yeah, so multiple ways. The easiest way is just shoot me a text. Just, hey, Brian, saw you on Zuber's show. I want to talk real estate. So the easiest way to contact me is 702-257-LEBO. 702-257-LEBO, L-E-B-O. You can go to my website, lebogroup.com, and really to acclimate yourself to the market, the best thing to do is go to my YouTube channel, which is just the Lebo Group. So just type in the Lebo Group, type in Brian Lebo, and I do monthly update videos where all this analytic data that we've discussed today, this is what I discuss in a roughly 10-minute period. So I break down all the analytics for you, and then I explain to you whether or not this data means something or if this is just an empty caloric statistic. But I try to explain to you how we got here, what we're doing, and where we're going. So it's a great way to acclimate yourself to the market, and then reach out to me and let's just see what we can do. But yeah, I pride myself on being objective and just saying it how it is. No spin, just these are the facts. Yeah.
If you're in real estate, I don't care if you have no plans in investing in Vegas, you have to follow Brian Lebo. He puts out the data. He's got a track record that goes months, years. You can go back and watch. It's just data. I love what you do. I love the analogies and the fun that you have with it. So please keep that up. I watch every month. The day it comes out, it's one of the things I must consume. So Brian, thank you so much.
My pleasure. Thanks everyone for watching, and I'll see you guys on the next one.
There you go.